Welcome to Trading Lounge and the US indices and a few stocks for the 2nd of February. With the NASDAQ here, I've been looking at this in a conservative manner of wave 3 here with an A, B, C here for wave 4 and then going up as 1 and 2 and 3 and 4 and 5 and counting a top here. So our idea yesterday was to see if the move down through here was in 3 waves or 5 waves, because if it was 5 waves then it would give us more depth coming down here, but in 3 waves it would tell us that it's a correction. So I want to go to the tick chart here just to explore that pattern. So on the pattern here from the top here, I can count this down as 1, 2, 3, 4, 5 here, right? And then this correction, and then 1, 2, 3, 4, 5. So from this low here, I've only got 3 waves down here. I've got 3 waves back here, and then I've got 5 waves here and a B wave here, then 1 and 2 here, and 1, 2, 3, 4, 5 here for 3rd, 4th, and 5th. So what I'm actually getting here is I'm getting 3 waves here and 3 waves here. So I'm getting sets of 3 waves. So we are in a correction. Now, what I don't know is that do we just continue straight up from this point, or do we see a more complicated correction? Because if this is in 3 waves here, well, this is in 3 as well here, so that sort of throws another sort of spanner in the works. So it can be completed here as a WXY, I guess, but it could also expand further as well. So just let's look at this point here. So right at the 61.8%, I can see here that we've got 1 and 2 and 3 and 4 and 5. So we've still got a little bit more of a move here. So what we could say is that gravitating over to the closest largest number, and in this case an important one, we got 13,000, and then 1, 2 and 3 that make up group 1. So we would normally see the arrival, the reaction, the first high above the level, and then a corrective pattern at that point. So if we use that classic trading levels pattern here, then we could probably move up from that point, but you just got to be careful that it doesn't come to this top here and then we get a larger correction with another 5 waves down here, so to speak, before we go up. Now we're in a wave 4 here, so that means that it can get rather complicated. Okay, so that 13,300 is a bit of a saving grace at that point to have a nice tested support on that, because it looks like we can count this up here as 1 and 2 here, and then going up here further. So it could just keep impulsing higher, but if it was going to terminate, then we're pretty close to where it can be terminated here at the 13,300. So that means we need to go back to the, was it the daily chart? Oh, it's a 1 hour chart. That's not going to help, is it? So coming back to here, so when we're looking at this structure now, it's like, well, what's because I've been counting up in a conservative manner, just sort of step by step and not getting ahead of myself, then I need to say, well, what's the best count here at this point? And I think the best way to handle this here is our alternative count. So if I go to this page, I think, yeah, so in this area here, we've had this as a possible wave 1 up at this point here, where we've got a very clear 1, 2, 3, 4, and 5 here. Now this is not very clear on the SP 500, and it's a bit of a stretch to use that on the SP 500, but I may have to. But when I look at stocks like this is the Russell 2000 here, so this move up through here is the same move. So on the Russell it looks good as a wave 1 and wave 2 here, doesn't it? Rather than an A wave, a B wave, and a C wave here. So there's there's lots of markets like this where we can use it as wave 1 and 2, and I think we might have to use that in terms of that on the S&P as well. I know that and it might be the wrong move, and it might be the right move. I'm not quite sure yet, but I need to take the next logical step all the time. So that brings us back to this wave 2 being over here and this wave 3 being up here, and that would look a little bit like this on the 4-hour chart here, with wave 3 here, wave 4 here, and then wave 1 here and 2 here, and then wave 1 and 2, and 1, 2, 3, 4, 5 for the third wave, the fourth wave, and then going up for the fifth wave here. And that gives us good clearance on this as well. So what we could also do here as well is take the low of this structure here, and I think that's about it there. So 38.2%, let's just have a look at that. See, that's still down here for this. So I've got this here as an A wave, a B wave, and a C wave. That doesn't count in 5 waves, so we can't really have it like that. We could have it, we could have this B wave sitting over here on this. Let's just say that fails for a moment, and then we call it over here like that. Then this here would be the A wave here, then an A and a B and a C wave here for the B wave, and then down for the C wave here. So we'll know, if this market finds a really nice solid support on the 13,300, then you'll know where you are from that point. We can move up from there. But my point today is that this move here appears to be bullish, corrective, and that means that we would make a new high. So in terms of making a new high, we can pretty much just grab the length of wave 1 because the extension's in wave 3, and we can just move that over here. And if I bring it down to the 38.2%, look, it basically it'll take us up near the 14,000 here for this. Okay, as that wave 5, and then I'll need to check on that to see if we need to expand further on that. But yeah, so yeah, that's the situation with the NASDAQ at the moment. So we can have a look at the S&P now. So this is the S&P on the daily chart here, and this is the way that we've had it all the way along, and looking at this as a wave 4 coming down through here. It helps confirm as a wave 4, and we'll look at that in a moment. But the problem with this is that it's dropped down and now it's overlapping wave 1 here. So that's the first problem with that particular count at this stage. If I just go to the 1-hour chart here just for a moment, we can pull back in a moment. This is what we were looking for yesterday. The problem with this is that, yes, we can count this one down as 5 waves and this one back here and 50-60% retracement level and so on. But this one here finishes in 3 waves as well here. So an A and a B and a C wave here. So that means that the B wave can drift over here. It's possible to look at this as wave 1 and 2 here as well. But once again, in this case, I've got 2 targets here. Each one is taken from these particular lows here, because if you count this down as wave 1 here or wave A, okay, there's probably a bias towards wave A now because of the NASDAQ only having 3 waves down through here. That sort of puts a slant on that. But if we were looking down here as wave A here or wave 1, we'd look at this as the A wave here, the B wave here, and the C wave over here. So in that case, we'd always take it from this level here. So that would bring us across from that level. So that's where that 61.8% comes in from here. And if I took it from this one here to this one, well, then it's the lower end here. But still, at the end of the day, it's this number here, the 3,800, that we would need to see as a really nice support before. I mean, you may be long already. Just saying that we would need to see that first high above the level, like this one here. We didn't have the reaction there, so that could be the overshoot pattern. But still, at the end of the day, that's the point that we'd be going. That's what we're looking for, and that's what we're looking for over here as well. We're just looking for that reference point, and then the market most of the time unless we're in some parabolic sort of move, would come back and give us that correction here at this point. It'll give us our second point here, and then if it goes up, then we get it. So in this case, if it went up there, then we'd be long from that point. It's simple, but it works. It just keeps you on the right side at the right time, and then it's just a question of position sizing and so on. Right, so this can be counted down in 3 waves here. So it's so that puts this possible scenario in place, and putting a wave C over here, and yeah. So if it's going to continue, you'd need 3,800 as support. So this here overlaps the previous wave 1, so we can't really look at it like that. So we need to move it across. If we were going to look at it the same as the NASDAQ, which is, it's got its good points and bad points for it, but that means that we would count all this up here in 5 waves as the 1 and the 2 and so on. So, but here we don't have that really nice 5-wave structure here, but on the Russell and the SP500 we can see that it's got 5 waves. It just doesn't really display here that well, but I have to say it doesn't display that well here as a C wave here either, you know. I mean, I can see from here we've got 1, 2, 3, 4, 5, so that's okay. So but you know, that what's that? You know, that's more like the C wave, isn't it? So we could call this the A and the B in here somewhere. So I think it kind of sits okay. There is there's a slight problem with it. We could look at this as 1 and 2 in here, and then look at all of this as all this is the 3rd and the 4th and the 5th here. Anyway, we'll pull it apart and we'll chat about that a little bit more. But for today, what it does do is it separates the low of wave 4 here to here, from here. That means that if we take this low here, then the 38.2% comes in quite nicely over here. So it's kind of fitting. So the only question I've got today is how complicated is this going to get? Are we just going to push straight up to 4,000, or are we going to see a bit more of a complicated correction here? I don't know, but I can say support on 3,800 would be the catalyst and a trigger within that space to move up, and we would trade up to the 4,000 at that point. So yeah, you can think of that journey there and think of a way to build in there on the long side. Okay, let's have a look at some stocks. The first one in this case is Lending Tree here, and you know that I'm bullish on this one. This was the best pick of the 130 stocks that I look at. This was the best one out of those disruptive stocks. This was the better one. I'm sure there's Tesla's in that group as well and so on, but I'm talking about sort of less known ones. But this setup here is fantastic because we've got that 3-wave structure here, and then an impulse wave here, and a 3-wave structure here. And for this one here, we're looking up for 1 here, back for 2 here, then up for 1 and back for 2, and up for 3, 4 and 5. So there's a fair bit of 3s and 4s and stuff to muck around in here, and then we've got to pull back over here, and we have a position here, but we'll keep the stop out of the way. But yeah, it's not the time to shovel in just yet. We'll do that over this side over here, but I like the potential of this. We do need to take the top of the wave B out here to make it a wave B. So as soon as we take that top out here, then it helps us call this in as an A and a B and a C, because technically we could look at this as down for 1, back for 2, down for 1, and A, B, C, back for 2 here, and fail from that point. That's the problem. So taking that top out here, over here somewhere, would help us, just another box that's ticked. And also too, once we can count 5 waves up here, that'll be another box to tick. And then we'll have this ABC pattern here, and once that high gets taken out, then that's another box ticked, and we can really move in. But the time you get in over here, there'll be everybody will recognize it at this point. They don't recognize it yet. Many do, of course. Okay, Tesla. So with Tesla here, there's a couple of ways to look at this. We I had it as wave 3 over here with a triangle over here for wave 4 and going up for wave 5 here as wave 3. Okay, and then would pull back for wave 4 here. It's really given us a bit of a 5-wave structure to the downside. If that's the case, just bear with me a tick. So if that's the case, then we're going to run into headwinds here anyway at the 850. So we could come down in 5 waves here and just have that as the A wave there. So let me just copy this here. We just need to look at a few things. The A wave here, I should be using 1 degree higher, and then a B wave here, and then a C wave down. So if this is going to fail, this is where it's going to fail from and come down, and then it will be from wave 3 here, be an A wave here, a B wave here, and a C wave coming down here further. The other way to look at this, I think is interesting, is looking at this here as 5 waves here. And I kind of like that, because, I mean, yes, it did overlap a little bit here, but it wasn't nice strong third wave, and everything was like, everything as an impulse wave is good. So to have that as an impulse wave as wave A here, and then look at this here as a triangle for the B wave, so an A and a B and a C wave here for the B wave up here, and then look at this as 5 waves for the C wave down here to make wave 4, either wave 4, then we can go straight up from here, and that's quite good at that point. But we can't confirm that unless we get a nice support on this level here. So it's okay to be long at the moment. If you are long, it looks rather impulsive, so that's okay. But I'm just letting you know that you need the 850 here as the tested support before it's a safer journey to the upside. Facebook. Okay, so Facebook's sort of hanging in there, and it may be saved in this case, because looking at wave 3 here as a WXY over here for this as wave 4, and then looking at that as wave 1 and coming back for wave 2 here. So the wave 2 is still in play. We've been looking at this on the tick chart as well. I won't go into that today because a bit short on time, but I also just want to see how this plays out here. If this finds between the top and the bottom here, if it finds support on the 61.8% or at least the 272, then you can build in on the 80, and of course we can certainly go long above this high here, and if that's the case, then we'll be taking out this high here, so it's going to leave us a fair way up. Of course, we've got our levels, so we've got the 300 in here, so that needs to be navigated, but we should be pushing up. Let's just assume for a moment wave 3 would need to be longer such, and then wave 5 can be short or it can be long depending on what's going on in the world, but then that would give us that wave 5 top over here that we've been looking for. And this makes, all of this makes just another reason that the SP 500 and the NASDAQ need to go higher as well, because this is a corrective pattern here, and that suits in nice. It makes everything a bit tidier when they start to pull together, when I can sort of see how they can pull together a little bit. Okay, now next one is Square. As you know, with Square, I'd counted all the way up through here. Wave 1 here is a little bit small. That's a bit disconcerting. So this move down through here so far, it'd have to count it as an A wave, a B wave, and a C wave. Now, I thought that we may have a wave 4 and a wave 5 coming down, because we never know. I always wait for the first leg to come down. I always wait to see if it's going to be in 3 waves or 5 waves, and then I make my decision. So in this case, we've talked about it before here on the 230. So 200 is the major level. Then we've got 10, 20, and 30. So 30 is the top of group 1. If we get support on that, then we're going to be going up from that point. So you could wait for that. You could probably even buy that new high here as well in that case. But anyway, the official thing is the 230. Even being up there would be quite nice. It's always nice to know where that 61.8% is, and there's no gap to come up here and close, which is also nice. Not that it's a big deal in stocks. Yeah, so the 230 is the 61.8% mark as well. So that's going to be the front line where that is. And when it comes to gaps in the market, they can be important, and they may not be important. And the way that I normally assess a situation is just go back in its history and start to have a look at what gaps have been covered and what gaps haven't been covered, and then you'll be able to work out that gap was covered, and you start to work out what percentage of gaps are covered for that particular market. Okay, that's with stocks. That's how I would handle stocks. Unless the stock is traded on another exchange, then there's going to be gaps in that. There's nothing you can do about it. If it's the futures market, well, then there's every contract for contract, so that gap will be covered at some point. Okay, Apple's the next one. Nothing really to change here, except I've got this little wave 1 up here as well. So this counts as 1 and 2 and 3 and 4 and 5 here for wave 1. And now that we've changed it for the NASDAQ, we would probably need to change it for this market here as well. So I'll just take that from grey to blue now and just upgrade it one step, and we'll give that some consideration here. Yeah, we'll just wait for a little while, just see how that goes, because as I've got it here so far, this being wave 1 here, and I need to double check in there as well, but let's just see how this goes. This is really just a reaction from the 150 here, and yeah, I mean, there's going to be really good support in this space here, so we don't really have to worry about this getting out of control over here for that just yet. So we expected it to come down to the wave 4 of 1 lesser degree, and then it should push up from that point. And the next one is Google here. So, well, this is interesting, isn't it? Because we've used that low as wave 4 here. And then this wave 1, 2, 3, 4 here as wave 1 and 2. So this is just another example where we can use this as the NASDAQ as well here for this. Now, I've always counted this as conservatively as 1 and 2 here, and then 1, 2, 3, 4, 5, and 3 and 4, and going up for wave 5 here. But of course, this could be changed. This could be wave 1 and 2 here. This could also be wave 1 and 2 here of a bigger picture to the upside here. Okay. Now, we weren't really going to get out of this until that's there, so if you're still in that, well, then that's good. The stock didn't get hit, but you'd need to take profit at that, at the 2000, but that looks like it's on track. So yeah, just nice and conservatively, but just understand that we can expand this structure. But I think that either way, we're just going to move up to here. We're going to react again from here, and then we'll just end up doing something like this here. We'll see. We'll still need that to go long on over here. So we need to allow it to, you know, you don't want to get caught in a lot of this unless it's going to go sort of parabolic, so to speak. Yeah, it may push up through that a bit easier than that, but that's the general gist of things here. Okay, and Amazon. Okay, so with Amazon, we've been talking about another pattern here for this, but I think we can just, based on what I can see now, is we can put, well, that doesn't go there. I'll just move that, but that wave 4 will go in on this one here. So then we can look at this as wave 1 and wave 2 here. So now that we've got more of a bullish count coming into play, so taking out that high would be the trigger to see further upside at this point. And I don't know if we'd get to 4,000. Let me just check on that. 3,800, we definitely want to take some money off the table. We don't need that there. So 4,000 is a medium level at that point. So this would just be a triangle here for this. Okay, well that's the trigger there. You could go in earlier if you wanted to as well. I won't look at that on the intraday right now, just double checking stuff. And that will be the D wave and the E wave at that point. I'll just save that. Alrighty, well that's it. Thanks for tuning in. Oh, just one more thing, I think. No, that's okay. I'll leave it for the time being. Alrighty, cheers.